composition scheme, see what you need to do is that after completion of this rocket revision, so you need to solve the problems, as many problems as you can. So now that is like not necessary that dedicatedly you need to sit and solve the problems. So this 3 days is over, okay, like revision is over, which means that you learned the subject. So now what you need to do, daily basis, say just 1 hour or 2 hours whenever you are feeling, like afternoon onwards. So because morning times and all you will be preparing for other subjects, afternoon you feel little drowsy, etc. So take some indirect tax problems and solutions and you start solving the problems and solutions. At the time when you are solving problems and solutions, you may not be able to recollect the provisions. At that time you see that's it book. So that's how it should be used. You understood what I am telling? And say one concept you did not understand, and you can just again watch in the YouTube that particular concept alone again, so that you can try to solve the problem. So that is the objective. So actually if anyone asks me, the best combination will be that's it book plus problems and solutions. So any problems and solutions, but it should be updated. I am not telling that you have to follow my book only, but any problems and solutions, but that should be updated. So if you have that, definitely application, see ultimately how much we have learnt is not important, but to how much extent we are applying it is only important. So that when you do know immediately, so you should not delay it. Again, don't give 15 days gap and then open any problems and solutions. No. So daily just 2 hours or 1 hour is also okay. So just randomly some problems you start doing it. So you will be in touch with the subject, that is enough. Then composition scheme under section 10. So we have two types of composition scheme, section 10 subsection 1 and 10 subsection 2a. First of all, composition scheme is what? A simplified scheme for payment of GST. And what is the advantage of composition scheme? Rather than paying GST at the normal rate, we will pay GST at the reduced rate. And what is the disadvantage because of that? We cannot take ITC on our inward supplies, and that 1% or 5% or 6% whatever we pay under composition scheme should be paid out of our profit, and we cannot recover from our recipient. So now these two composition schemes, first composition scheme under 10 subsection 1. So when will it be applicable? If aggregate turnover during the previous year does not exceed 1.5 crores, or for 8 special category states if it does not exceed 75 lakhs, then during the current year they can opt for composition scheme. What are those 8 special category states? Not MMTN ASAM, it is MMTN USAM, that is Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. Okay. So for these 7 states, for these 8 states, the limit will be 75 lakhs. For other states, what is the limit? 1.5 crores. If aggregate turnover during previous year does not exceed 1.5 crores or 75 lakhs, then current year they can opt for composition scheme. And who can opt for this composition scheme under 10.1? Manufacturer, trader or supply of food service provider. Other service providers cannot opt for composition scheme. And what is the benefit of reduced rates? If they are manufacturer, they need to pay GST at 0.5% CGST, 0.5% SGST on total turnover. Whereas if they are a trader, then they need to pay GST at 0.5% CGST, 0.5% SGST on taxable turnover. If they are food service provider, they need to pay CGST 2.5%, SGST 2.5% on total turnover. And a person who is opting for composition scheme under 10 subsection 1 can render any other services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. So to that extent they can provide service. First of all, 10.1 is applicable to whom? Manufacturer, trader or supply of food service provider. But they can also render any other services. But to what extent they can render? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Now with respect to those services, what will be the rate that they need to take? The rate applicable to a trader, that is 0.5% CGST, 0.5% SGST on taxable turnover. So rates we need to remember. For a manufacturer, So 0.5 CGST, 0.5 SGST on total turnover. For a supply of food service provider, 2.5 CGST, 2.5 SGST on total turnover. For trader, so 0.5 CGST, 0.5 SGST on taxable turnover. And for the services up to 10% limit or 5 lakhs, whichever is higher, 0.5% CGST, 0.5% SGST on taxable turnover. Understood? Then next, what is the current year limit for the reduced rates? So current year limit for the reduced rates is 1.5 crores or 75 lakhs, which means that what? So current year up to this 1.5 crores or 75 lakhs, they will be into composition scheme. And after crossing that, they will be going into normal scheme, and next year they cannot go for composition scheme. Why next year they cannot go for composition scheme? Because current year it crossed 1.5 crores. And who cannot opt for composition scheme under 10 subsection 1? So you have to remember that with a keyword, yes, 9 RCM. Section 9 is RCM. Yes, 9 RCM. Yes, for service providers other than supply of food and beyond the 10% limit. Okay. So they cannot opt for composition scheme under 10.1. Service providers other than supply of food or beyond the 10% limit, they cannot be into 10.1. And all these conditions we need to see for the current year or previous year. Current year, not for the previous year. Whichever year you are opting for composition scheme, that year you need to see. So current year you should not. Previous year you can make anything. Previous year you can be anything, irrelevant. So current year only you are opting for composition scheme. Now current year you should not be providing any service other than supply of food or beyond 10% limit. Plus you should not be a non-resident taxable person. Who is a NRTP who come from outside the country to India and is not having any physical place of business in India is called as a NRTP. They will be supplying goods or services in India. So example, cricketers who come from outside India to India for playing the tournaments, or actors who come from outside India to act in the movies, so will be called as NRTP. Then interstate supplier of goods or services, whether taxable or exempted. So if you are making interstate supplies of goods or service, you cannot opt for composition scheme. That's the reason why rates and all we discussed, 0.5 CGST, 0.5 SGST, like that. Then non-taxable supplies, that is a restaurant having license to sell liquor, selling liquor. Can they opt for composition scheme? Being restaurant can opt for composition scheme, but as they sell liquor, which means they are making non-taxable supply, so they cannot opt for composition scheme. Then supply of goods or services through e-commerce operator. So for example, I am selling goods through Amazon or Flipkart. So but my turnover does not exceed 150 lakh. Can I opt for composition scheme? No, because supplier of goods or services through e-commerce operator cannot opt for composition scheme. Same way restaurant. Restaurant is selling food through Swiggy or Zomato. Can they opt for composition scheme? No. So because of this restriction. Then RCM under section 9 subsection 4 on which GST is not paid. RCM under 9 subsection 4 is what? Promoter or builder on which GST is not paid. So this condition is practically irrelevant now. At present it is irrelevant because promoter or builder's outward supply will be what? Easily crossing 1.5 crores, correct or not? So therefore definitely they will not be into composition scheme. So practically this condition is irrelevant. Then C for casual taxable person. Who is a casual taxable person? A person come from other state to this state, just like NRTP from outside India to India. CTP will come from other state to this state and is not having any physical place of business in this state. Then manufacture of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. Remember, only manufacturer of these goods cannot opt for composition scheme. What about a trader? What about a trader? Can a trader of these goods opt for composition scheme? Yes. So you need to remember who cannot opt for composition scheme. Yes, 9 RCM. Yes, for supplier of service other than supply of food or beyond 10% limit. Then N for non-resident taxable person. I, interstate supply of goods or services. Another N, non-taxable supplies. E, e-commerce operator, supply of goods or services through e-commerce operator. R, RCM under 9 subsection 4. C, casual taxable person. M, manufacturer of notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. So these cases composition scheme is not possible under 10 subsection 1. Okay. Now in case of 10(2)(a), what is the differences? So 10(2)(a) is applicable, composition scheme under 10(2)(a) is applicable if aggregate turnover during the previous year does not exceed 50 lakhs. And who can go for 10(2)(a)? Any manufacturer, trader or any service provider. But for manufacturer 10(1) is only beneficial because limit is also high and rate is also less. But if you see in case of 10(2)(a), the rate is 3% CGST, 3% SGST on total turnover. So manufacturer and trader definitely will go for 10(1). Even supply of food service provider also will go for 10(1). Then 10(2)(a) is preferable to whom? A person to whom 10(1) is not applicable. That is service provider other than supply of food, or to whom 10(1) is applicable but the services, other services exceeds 10% limit. So because being in 10(1) they can provide other services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. If they want to cross that limit, then 10(2)(a) will be beneficial for them. And in case of 10(2)(a), what should be the aggregate turnover during previous year? It should not exceed 50 lakhs. And what is the rates? 3% CGST, 3% SGST. And current year also up to what turnover they will be into composition scheme? 50 lakhs. And what is the difference in condition? Here it is S9 RCM, here it is 9 RCM. Because yes, services, any services they can provide due to that reason. And next, what is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme? Generally, what is the meaning of aggregate turnover? Generally, for normal cases, we discuss taxable supply, non-taxable supply, exempted supplies, zero rated supplies, excludes inward supplies under RCM and taxes. Correct? Now, extra 2 points you need to remember. It will become aggregate turnover for determining the eligibility to opt for composition scheme. That is, excludes interest on loans, advances, deposits, and it will include pre-registration turnover. Okay, what are the 2 points you need to remember? So aggregate turnover, general meaning of aggregate turnover, it excludes interest on loans, advances, deposits, and it includes pre-registration turnover. What does that pre-registration turnover means? Say for example, in the previous year 2021-22, I commenced the business. I commenced the business in the previous year 2021-22, and so up to 40 lakhs, I have not got registered, no registration. After crossing 40 lakhs, I have registered, and my turnover post registration, so this is pre-registration turnover, 40 lakhs, and post registration my turnover is 120 lakhs, and current year 2022-23, can I opt for composition scheme? So we should take only the post registration turnover, or should we add pre-registration turnover also? We should add pre-registration turnover also. So total will be how much? 160 lakhs, which exceeds 150 lakhs. So current year, can we opt for composition scheme? No. So what is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme, which is common between 10(1) and 10(2)(a). So whatever points that we are going to discuss now will be common between 10(1) and 10(2)(a). So because we have seen what are all the differences between 10(1) and 10(2)(a), remaining and all will be common. You understood? So what is the meaning of aggregate turnover? Come on. Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, excludes inward supplies under RCM, excludes taxes, excludes interest on loans, advances, deposits, and includes pre-registration turnover. Interest income will not be considered for calculating aggregate turnover as well as turnover in a state or union territory. Now, what is the meaning of turnover in a state or union territory? Turnover in a state or union territory is same as aggregate turnover, except that turnover in a state or union territory is computed state-wise and aggregate turnover will be computed on all India basis. But both definitions are same. Okay. Aggregate turnover, turnover in a state or union territory. Where we use turnover in a state or union territory? While computing this 10% limit, we use the word turnover in a state or union territory. A person who opts to pay tax under 10(1) may supply services other than supply of food not exceeding 10% of turnover in a state or union territory in the preceding year or 5 lakhs, whichever is higher. And while computing this 10% limit also, we should not take interest on loans, advances, deposits. So what does it mean? Say, for example, previous year 2021-22, I am having business in 3 states, Tamil Nadu, Andhra Pradesh and Karnataka, and my turnover in Tamil Nadu is 30 lakhs and turnover in Andhra Pradesh is 40 lakhs and turnover in Karnataka is 60 lakhs. Okay, so total turnover is 130 lakhs. So it does not exceed 150 lakhs. So current year 2022-23, can I opt for composition scheme? Yes, you can opt for composition scheme. But to what extent we can provide the services during the current year? To what extent we can provide the services during current year? Total 130 into 10%, 13 lakhs or 5 lakhs, whichever is higher. Is it correct? No. So we should never do it on aggregate turnover basis. State wise we need to see. So therefore services during the current year, 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher, 5 lakhs. And again for Andhra Pradesh it will be 5 lakhs and for Karnataka it is 6 lakhs. So we can provide the services during the current year to the extent of 5 lakhs in Tamil Nadu, 5 lakhs in Andhra Pradesh and 6 lakhs in Karnataka. And suppose if you are crossing 5 lakhs in Tamil Nadu, but overall it is within limit of 16 lakhs, because total we can provide services how much? 16 lakhs. But in Tamil Nadu alone we crossed 5 lakhs, but overall it is within 16 lakhs. Are we eligible for composition scheme? No. So when we are disqualified under composition scheme in Tamil Nadu, we are automatically disqualified in composition scheme from other states also, because composition scheme will be all in or all out. Means if you are ineligible for composition scheme in one registration, all the other registrations also composition scheme will be ineligible. Is it clear? And next one, while computing this 10% limit, so services by way of interest etc. should not be considered. For example, previous year 2021-22, so my turnover is 120 lakhs. Current year 2022-23, so I am providing some goods and services, okay, both supply of goods and supply of services. So goods and services, and these services we have, interest income 8 lakhs and other services 10 lakhs. Okay. Now 120 lakhs. To what extent I can provide services during the current year? 12 lakhs. 120 into 10%, 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. But here if you see the services is 18 lakhs. So does it mean we breach the condition? No. So while counting this 12 lakhs, don't take interest income, which means other services other than interest. So which means 10 lakhs. It is within the limit of 12 lakhs. So we can continue in the composition scheme. So while computing this 10% limit of services, so we will not consider supply of food etc. Why supply of food? Because supply of food no restriction. So because it is covered under 10(1), and interest on loans, advances, deposits also no restriction, how much ever it can be there. So therefore we will see services other than supply of food and other than interest should not exceed 10% of the limit during the previous year, turnover limit during the previous year or 5 lakhs, whichever is higher. That is this point. And what is the tax rate applicable for these services? The tax rate applicable to a trader, that is 0.5% CGST, 0.5% SGST on taxable turnover. Then, sir, I have purchase of commodities from agricultural commodity exchange. Will it be supply under GST? So why? I don't know. Supply means supply. Supply is there. but taxable or exempted we don't know what type of agricultural commodity it is. Okay, so therefore whenever you purchase agricultural commodities, so from commodity exchange where there is physical delivery, usually commodity exchanges and all there is no physical delivery and all, so it is only the settlement difference in the prices. So futures and options kind of commodity exchanges, how it will operate is that, so it will be settlement, mark to market settlement. So mark to market settlement means physical delivery and all will not arise with respect to that. So first of all, in that case there is no supply, okay, and futures and options are treated as securities. Securities are not goods nor services, okay, unrelated question this is. And then sir, interstate, I also read that maybe they were asking about interstate purchases, can I have sir like that. So interstate purchases you can have interstate purchases no restriction, interstate sales only you should not have, you can have interstate purchases. Now in that case, whenever I need to pay GST under RCM, I need to pay at what rate? For example, I am under composition scheme, trader, I need to pay 0.5% CGST, 0.5% SGST on total taxable turnover. Now I have some inward supplies on which I need to pay GST under RCM. For that also I can pay 0.5% CGST, 0.5 SGST. No, on that I need to pay at the regular rates. Okay. Now see other procedural provisions. If you are already registered, how to opt for composition scheme? You need to file one form, that is CMP2, when before commencement of the financial year. Suppose if you are already not registered, now only you are going into registration, you need to file one form, that is REG1, and you need to select the composition scheme. And so that is during the financial year, any time you can enter into the composition scheme if you are not a registered person, because in the registration application you will select the option as composition scheme. But if you are already a registered person, you need to wait till the commencement of the financial year. Once the financial year commences, then only you can go into the composition scheme. Display of composition taxable person in every notice signboard displayed at the principal place of business and additional place of business. And a person opting for composition scheme is required to file a quarterly return. That quarterly return is in CMP 8 by 18th of the month following every quarter. Then whether GST is payable on advances in case of goods by a person under composition scheme, yes. Yesterday I did not mention this point while discussing time of supply section 14, that section 14 is applicable for composition scheme, goods also. I said section 14 is applicable only in case of supply of services normally, because this notification 66/2017 is not applicable for a person opting for composition scheme. So which means section 14 is applicable even in case of goods for a person opting for composition scheme, yes. And normal provisions of time of supply will be applicable in case of person opting for composition scheme, which means they need to pay GST on advances. So then how to compute the GST payable? First they need to take whatever is the bill of supply during the quarter, value as per bill of supply during the quarter, because a person opting for composition scheme will be giving bill of supply, and add advances received during the quarter pertaining to the next quarter. Advances, because for which bill is not raised during the quarter, add advances received during the quarter for which bill of supply is raised in the next quarter, minus advances received in the previous quarter for which bill of supply is raised in the current quarter, because that advance is already taxed. That advance is already taxed. So minus advances received during previous quarter pertaining to current quarter. So this should be taken as the value for payment of GST under composition scheme. And they need to file an annual return in GSTR4 by 30th April of the succeeding financial year. Then validity of composition scheme. If all the conditions are valid, the option remains, if all the conditions are satisfied, the option remains valid, which means that every time they don't have to make application for composition scheme, which means first year they opted for composition scheme. So second year also can they continue in the composition scheme? Yes, if all the conditions satisfied and no need to again file a intimation. Okay, then if conditions are not satisfied, what they need to do? They need to come out of the composition scheme by filing a intimation in CMP4, entry into the composition scheme CMP2, exit from the composition scheme CMP4. And what is the time limit within which they need to exit from the composition scheme? Within 7 days they need to file form CMP4 as intimation, and self withdraw voluntarily also they can come out even though they satisfy the conditions. So why? Because composition scheme will not be feasible if there is no increase in the volume, because the disadvantage in composition scheme is that they cannot take ITC on inward supply and they cannot charge GST from the recipient, which means the profitability will be less. Then the only way to increase their profit is by increasing the volume. Suppose if the volume is not increasing, they will come out of the composition scheme. Anytime voluntarily they can come out of the composition scheme. Whenever they come out of the composition scheme and go into normal scheme, 18(1)(c) gets attracted. So they can take ITC on the closing stock, inputs as such held in stock, inputs in WIP, inputs in FG, even capital goods. For that they need to file one form ITC1, ITC1, statement in form ITC1. Within 30 days of intimation, they need to file for the purpose of coming out of the composition scheme and going into normal scheme. And when proper officer is of the opinion that a person has breached the conditions of composition scheme but still continuing in the composition scheme, so they will be giving a notice in CMP5. And once they give the notice, within 15 days we need to give reply to the notice in CMP6, and after giving reply in CMP6, within 30 days they need to pass an order in CMP7, either allowing us to continue in the composition scheme or denying the composition scheme. This denial of composition scheme will be prospective or retrospective? Depends. It can be either prospective or it can be retrospective, but not before the date when we committed the breach. For example, we committed the breach on 18 September 2022 and we continued in the composition scheme for the entire financial year 22-23, and 2024 they identified that we made a breach and they are denying the composition scheme retrospectively. They can retrospectively deny it, but not before 18 September 2022, because on that date only we committed the breach. Is it clear or not? So therefore, denial of composition scheme can be prospective or retrospective. However, such effective date shall not be prior to the date of contravention of the provisions of Act or rules. Now, this is the overview of various forms. CMP2. CMP2 is for what? Entry into composition scheme. Whenever you enter into composition scheme, 18 subsection 4 gets attracted. Normal scheme to composition scheme. So you need to reverse the ITC on closing stock. So for that you need to file one form ITC3. So therefore CMP2 and ITC3 is one combination. Is it clear or not? And CMP4, whenever you are coming out of the composition scheme, you can avail the ITC on closing stock. Therefore CMP4 and ITC1 is one combination. Then CMP5 show cause notice, 6 reply to notice, 7 issue of order, and 8 is a return to be filed. So what is the time limit for filing CMP8? 18th of the month following every quarter. Notice, no time limit. Reply to notice, 15 days. And order, 30 days. What is the time limit within which CMP2 should be filed? Before commencement of the financial year. What is the time limit within which ITC3 should be filed? 60 days. 60 days from the commencement of the financial year. And what is the time limit within which ITC1 should be filed? Within 30 days from the date of conversion. Conversion from composition scheme to normal scheme. And what is the time limit for intimation for withdrawal from the composition scheme? 7 days. Then, when is it advisable to opt for composition scheme under 10(2)(a)? So, a registered person who is exclusively engaged in supply of services other than restaurant services, or who is engaged in supply of service other than restaurant service along with supply of goods of value exceeding 5 lakhs in the current financial year. Why? Previous year aggregate turnover should not exceed 50 lakhs. Okay, 50 lakhs into 10% or 5 lakhs, whichever is higher, 5 lakhs. Correct? So means if I cross the services beyond 5 lakhs, I can come into the composition scheme 10(2)(a). Correct or not? For example, previous year my turnover is 60 lakhs pa. I cannot come into 10(2)(a) na. So therefore, previous year my aggregate turnover should not exceed 50 lakhs. And I have rendered services more than 10%. So then I can come into 10(2)(a). Okay, more than 10% of 50 lakhs means what? 5 lakhs. So I will come into composition scheme under 10(2)(a). Then meaning of various turnovers. So we have total 3 turnovers under composition scheme. Aggregate turnover for determining the eligibility to opt for composition scheme, and turnover for determining 10% limit of services, and turnover for payment of GST under composition scheme. So this aggregate turnover should be determined for current year or previous year? Previous year. Turnover for computing 10% limit also previous year. But turnover for payment of GST under composition scheme current year. And aggregate turnover should be computed on what basis? All India. Turnover for determining 10% limit state-wise. Turnover for payment of GST under composition scheme state-wise. What is the meaning of aggregate turnover for determining eligibility to opt for composition scheme? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. Whether interest on loans advances will be coming? No, it will not be coming. Okay. Whether inward supplies will be coming under RCM? No. And whether interstate supplies will be taken? Yes. Non-taxable supplies also taken? Yes. But sir, interstate supplies, non-taxable supplies, they cannot be into composition scheme. That is for the current year. Previous year you can have non-taxable supply, previous year you can have interstate supplies, etc. Then taxes also will not come, and pre-registration turnover will be included. Now the same meaning of aggregate turnover for determining eligibility to opt for composition scheme is the meaning of turnover. Everything same except that this aggregate turnover is on all India basis. This will be computed state or union territory wise. Even for computing 10% limit, of services, pre-registration turnover will be included. Then turnover for payment of GST under composition scheme. So this should be computed for the previous year or current year? Current year. And state wise. So here taxable supplies, exempted supplies and interest will not be included. So therefore in all these 3 turnovers, what is common? Interest on loans, advances, deposits will not be included. It will be excluded. And why non-taxable supplies it is given as not applicable? Because if you are having non-taxable supplies, how you will be into composition scheme? Same way export of goods or service or interstate supplies, because interstate supply of goods or service also are ineligible for composition scheme. So these 3 things should not be there. And inward supply under RCM excluded, taxes also excluded, pre-registration turnover, this is extra point to be excluded. So what does it mean? See this, say during the current year 2022-23, you are under composition scheme 10 subsection 1, composition scheme 10 subsection 1, and current year 2022-23 only you commence the business, and your aggregate turnover is total 240 lakhs. Your aggregate turnover is 240 lakhs. Okay. Your aggregate turnover is how much? 240 lakhs. Now, in this 240 lakhs, what is your pre-registration turnover? Pre-registration turnover, how 150 lakhs? Yeah, only 40 lakhs. Because only after crossing 40 lakhs you need to register, na? So pre-registration turnover is 40 lakhs. On that, whether you need to pay any GST? No, you are not required to pay any GST. And thereafter, on the next 150, 110, 110. Why 110 lakhs? Why 110 lakhs? Sir, overall 150, in that first 40 under pre-registration, no GST. Thereafter 110 lakhs, we need to pay GST under composition scheme. GST under composition scheme. Then what is the balance turnover? 90 lakhs. On that 90 lakhs, we need to pay GST under normal scheme. Is it clear? GST under normal scheme. Sir, this I am finding it difficult, sir. Okay, I will give you a super way. One section 10 subsection 1, up to what limit you will be in composition scheme? 150, correct? Correct, 150. 150 lakhs, exclude pre-registration turnover, minus 40. So remaining 110 lakhs. On that you pay GST under composition scheme, and remaining 90 lakhs you pay GST under normal scheme. Is that okay? Total turnover you take pa. What is the turnover under composition scheme? 150. What is the turnover under normal scheme? 90. So 90 normal rate, correct? And 150. In that 150, pre-registration turnover should be excluded. So in that 150, what is the pre-registration turnover? 40. So remaining 110. What if the pre-registration turnover is 20 lakhs? Because in some states 20 lakhs is the applicable threshold limit. Then 130. Suppose if it is 50 lakhs case, 10 to A. 10 to A, 50 lakhs, no, 10 to A, 50 lakhs will be under composition scheme, okay. So for that 50 lakhs, minus pre-registration turnover 20 lakhs, so remaining 30 lakhs only you pay GST under composition scheme. Is it clear or not? So that is what I mean to say, pre-registration turnover will be excluded while determining the GST payable under composition scheme. Not applicable means what? These supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme, okay. Clear here? So with this we completed composition scheme.